Welcome to The Explainer. This is where we break down complex stories and really get to the heart of what's going on. All right, so let's jump right in with a bit of a puzzle. You've got this company, Evolution AB. They're a huge player in online casino gaming. They just put out some quarterly numbers that honestly look pretty rough. But the story here is way more complicated than it looks on the surface. So check this out. On one side, you have the CEO himself, Martin Carlesund, basically saying, yeah, I'm not happy with these numbers. But then you've got analysts looking at the exact same data and calling the company a resilient compounding machine. How does that even work? What is really going on? All right, let's unpack this. Okay, so before we get to why some people are so optimistic, we gotta look at the flip side. We have to understand the pessimism. Let's call this the bear case. And it kicks off with some numbers that'll definitely get your attention. So the big headline number, the one that really spooked the market, was this: a drop in net profit of almost 8% compared to last year. Now, for a company that's been all about growth, any step backward like this, well, it's going to set off some serious alarm bells. And you know what's behind that profit drop? It's a huge slowdown in how fast their revenue is growing. I mean, it came in at just over 3%. That is a world away from the kind of crazy double-digit growth that investors were totally used to seeing from these guys. All right, so if we start digging a little deeper and ask, okay, where is this money actually coming from? The picture gets even clearer. You can see right here that Asia and Europe are, by a long shot, their biggest markets. And guess what? That is exactly where the problems are popping up. Yeah, so Europe, which makes up more than a third of their cash, it actually shrunk by 5% just in the last quarter. And at the same time, their number one market, Asia, is dealing with what the company describes as criminal cyber activity, which is a fancy way of saying pirates are literally hijacking their game streams. So let's just recap the bear case. Growth is slowing down, profits are falling, and you've got massive headaches in your two biggest markets. That paints a pretty worrying picture, right? But then you have the bulls, the optimists, and they're saying, whoa, hold on. They argue that just looking at that headline revenue number is like trying to call the winner of a football game at halftime. It's not the whole story. They believe the real game is being played somewhere else entirely. And they start with a really simple but powerful question. For a business like this one, is short-term revenue, which can jump all over the place, is that really the best way to check the pulse of the company? What if there's a better way to measure its real health? Well, for the bulls, this is it. They point to a metric they call the Game Rounds Index. And what it does is pretty simple. It doesn't track money, it tracks activity. It's just a raw count of the total number of games being played across the entire Evolution network. Think of it as a direct measure of how engaged players are. And this is where their argument gets really interesting. Because while that revenue growth looked pretty weak, this Game Rounds Index, it actually grew by a solid 2.7% during the same quarter. So what does that tell you? It suggests that even with all the money-related headwinds, the most fundamental part of the business, people showing up and playing the games, is still strong. It's still growing. And why does that even matter? Well, it all comes down to Evolution's incredibly powerful business model. It is a textbook example of scale economies. Look, it costs them a ton of money upfront to build a studio, the cameras, the dealers, all the tech. But once a single game table makes enough money to cover those fixed costs, to hit its break-even point, pretty much every single dollar it makes after that is almost pure profit. So more game rounds means they're hitting that break-even point faster, and that's where the magic happens. So while everyone else was freaking out about the short-term numbers, the company was busy playing the long game. And I mean really busy. They signed an exclusive global deal with Hasbro. We're talking brands like Monopoly. They opened their first ever studios in the Philippines and Brazil, huge new regulated markets. They expanded in the US to cover all 7 states where online casinos are legal. Oh, and on top of all that, they returned almost 800 million euros to shareholders. The bulls aren't just seeing a company weathering a storm, they see a company building an even bigger fortress. Okay, so we've got the bear case, the reasons to be worried. And we've got the bull case, the reasons to be optimistic. But no company exists in a vacuum, right? To really get the full picture, we got to zoom out and look at the entire industry they're playing in. And wow, the outlook here is, well, it's pretty staggering. The whole online gambling market is on an absolute tear. We're talking about a projection where it more than doubles in size over the next 10 years. It's expected to hit nearly $250 billion. To put that in perspective, that's a growth rate of over 12% every single year, compounded. And what's really key here is that the part of the market played on mobile phones is growing even faster. This is like having a massive tailwind pushing all the companies in this industry forward. Now, this chart is super revealing when you break it down. Yeah, sports betting is the biggest slice of the pie for now, but that casino segment, that's Evolution's home turf. It's still a massive market, and it's being driven by the live dealer games they specialize in. But here's the kicker. Look at how people are playing. Over 60% is on mobile. That means if your mobile experience isn't top-notch, you're pretty much dead in the water. It's absolutely critical.
Okay, this brings us to our final piece of the puzzle. And honestly, it might be the most important one. It's the one wild card that overshadows everything else for a company like Evolution. And that is regulation.
Hey, don't just take it from me. The company flat out says it in their own reports. They state that the development of laws and regulations is the #1 biggest risk to their future profits. It is their self-admitted Achilles heel. Actually, let's connect some dots here. Remember that 5% revenue drop in Europe we talked about? Well, that wasn't just the market slowing down. A big chunk of that was caused by Evolution's own choice. They're doing something called ring fencing. Basically, they are proactively pulling out of gray markets where the rules are fuzzy to make sure they're totally compliant when new laws kick in. It's a classic case of taking some short-term pain for what they hope is long-term gain. And this really is the ultimate double-edged sword. On the one side, sure, regulation is a huge risk. Stricter laws, higher taxes, that can crush growth. But there's another side to it. For a big, established leader like Evolution, clear rules can be a massive opportunity. It creates a stable, predictable market, and maybe most importantly, it slams the door on all those smaller, sketchy competitors who just can't afford to play by the new rules. So that leaves us right back where we started, with a big question. Is Evolution a risky bet on some really shaky ground, facing problems it just can't solve? Or is this a case where the house is about to win bigger than ever? Is it a powerful machine that's just using this turbulence to build an even stronger, more defensible business? In the end, the answer really depends on which narrative you find more compelling, the worrying numbers of right now, or the potentially powerful foundation they're building for the future.